Many sights to see, and when I look in my window, so many different people to be, that it's strange, so strange. You got to pick up every...
Hello traders, Gary Wagner here. It is Friday, the 22nd day of July, almost 11 a.m. in Honolulu, Hawaii, and this is the Daily Report for Gold, our weekend review. We have gold trading substantially higher this morning, trading up $17, $16 or so. The critical factor is it looks as though we are going to get a close above 1,600 per ounce. It's a very, very critical but beautiful thing. As you can see, we're going to start with the 240-minute chart. This is in Henkin format, so average format. And what is interesting about this market, we talked about the fact on Monday that as this market made its very, very first approach for 1,600, and that's right in here, my sentiment was that major benchmarks such as 1,600, 1,500, 1,000, those major benchmarks in gold, they're not going to be conquered in one battle. And in fact, you could see that because the market does in fact come down. It retests it. This is test number 2. So it comes up and as you can see is well above 1,600, but it was not to hold that area. This is through the week, comes back down, and of course, here we go back on Friday and we are back at that 1,600. Very, very interesting formation that we have seen in the market itself because as you can see, this basic formation that we're looking at is showing that this is that third attempt. My sentiment is that the third attempt should hold. In other words, I am looking for 1,600 to become support rather than resistance. Now, that's going to really be driven next week by some of the fundamental events that transpire in the market. Now, what's going to happen with the U.S. debt ceiling? There's uncertainty there. My sentiment is, of course, we're not going to default. There will be an agreement. It's what that agreement will contain. Also, realize that we have option expiration and first notice day for the market. That can impact the market itself. So we want to be cognizant and aware of that. And then lastly, the European debt crisis, that continues, and although there are talks about different bailout packages, there was something that came in for Greece the other day, that is another fundamental market information that we're going to definitely want to pay close attention to. The next chart that I want to take a look at is our basic Elliott wave count up in the upper left-hand corner. Let's go ahead and blow that up. And this is done as a 360-minute straightforward candlestick chart. And as you can see, we talked about this all week, but as that market came up, this is the historic rise from about 1475 to 1610. You can see that it found superlative support, 1579, right in this area, right here. This has been a very, very strong band of support, but at the same time, you can see that we still have resistance at 1610. My sentiment, is that we want to see a break over this record top. That's going to be the resistance area that we need to cover. Now, in terms of the actual count itself, I am going to hold off on putting any kind of labels on here. Absolutely, this was 3, this long stretch right in here. This was a corrective wave 4. We are obviously now in wave 5. Wave 5 is going to be composed of a subcount. We can absolutely, with some certainty, say that we've gone into wave 1, but that's going to be about it because this might be consolidation and then move back up. In other words, still a part of 1. Depending on how it acts over the week, we'll see how we're going to label it. But what is most important on a technical basis is A, holding our band of support being 1580. I think that we've done that at this point. The next thing is to make 1600 a band of support here, a band of support rather than resistance. And then thirdly is to take out this record top at 1610. So traders, this is going to be the last chart of the day, but it's also what I believe to be the most exciting chart. This is our basic daily chart, which contains Fibonacci extensions, a Fibonacci retracement, and our pathway, what we were looking for the market to do. Now, this has been what we were looking at over the last week. As you know, this is a very similar chart to what we saw in Kitco. The market itself, my first assumption was that the market would move up on this particular leg. My target or zone was between 1614 and 1609. In fact, the market came to about 1610. This 38% retracement level is a retracement from the start at 1475 to 1610, and a 38% retracement of that takes you to 1580. So my belief was that was where it would fall. As you can see, the market did in fact fall to that point. The next question and the next belief is, I think this market is headed higher, and I think that in terms of realistic targets right now, I'm looking at 1641 to 1647. I believe that we have the ability on this particular leg here to see the market go roughly to the 1640 area. We're going to have an awfully exciting week next week. We've had a great week this week. Traders, I always thank you for your support. This has been Gary Wagner wishing you, as always, good trading. And we'll talk to you on Monday for another daily update and review. Bye-bye.
Many sights to see. And when I look in my window, so many different people to be, that it's strange, so strange. You got to pick up